Welcome to Multibagger Shares. I am Manish Goel, SEBI registered research analyst. Today we study one of the greatest wealth creation stories in Indian stock market history, the Bajaj Finance transformation. How a sleepy two-wheeler lender became India's most valuable non-bank lender. And what permanent value investing lessons every Indian investor must learn from it. In 2006, Bajaj Finance was boring. It was a captive finance arm of Bajaj Auto, existing only to help customers buy scooters and motorcycles. For 2 decades it had done nothing else. Most investors had never heard of it. Institutional coverage was minimal. Then, in 2007, a 37-year-old professional named Rajeev Jain joined as CEO. He had an unusual conviction that India's rising middle class would need consumer durable loans, personal loans, SME lending, and eventually a full digital financial supermarket. The existing banks were too slow, too bureaucratic, too obsessed with corporate lending to serve the average Indian shopper. Jain's plan rested on 8 strategic pivots. First, in 2010, the company dropped the word auto from its name. Identity precedes strategy. Second, they built the largest zero-cost ME consumer durable financing business in India, long before Silicon Valley invented the term buy now pay later. Third, they diversified their borrowing sources, which protected them during the 2018 yield and FS crisis when half the NBFC sector was gasping for liquidity. Fourth, they treated their customer database as their most valuable asset and built proprietary credit scoring engines. Fifth, they refused to chase corporate lending, which later blew up most of their peers. Sixth, they reinvested every rupee of profit into technology. Seventh, they built a genuine retail deposit franchise. And eighth, they are now executing the Bajaj Finance 3.0 digital omnipresent strategy. The result? Over the last 16 years, Bajaj Finance's total income compounded at 34% per year, net profits at 52% per year, and assets under management grew 100 times over. By the end of FY 25, ARM had crossed 4.17 lakh crore rupees. In share price terms, if you had invested 10,000 rupees in 2006, it would be worth approximately 3.23 lakh rupees by 2026. Roughly 32 times your original investment. Here is the uncomfortable truth. Bajaj Finance was available at reasonable valuations for years. Most retail investors skipped it because they were too busy punting weekly Nifty options, chasing tips in penny stocks, asking WhatsApp groups for operator stocks. According to SEBI's own study, 9 out of 10 individual traders in the futures and options segment incurred net losses. 9 out of 10. F&O trading is essentially gambling. Meanwhile, a real compounder was hiding in plain sight, available to anyone willing to read the annual report. Now apply the same lens to Titan Biotech today. Closed at 432 rupees. Market cap 1783 crore. Promoters increased stake from 48 to 55.87%. Zero pledging. Net cash balance sheet. Operating margins doubled from 10 to 19% over a decade. Rose 16.9%. Return on equity 15%. This is not a buy recommendation. This is pattern recognition. The same structural ingredients that built Bajaj Finance are visible in Titan Biotech's published financials. The biggest lesson from the Bajaj Finance story is simple. Concentration, not diversification, builds wealth. Warren Buffett said wide diversification is only required when investors do not understand what they are doing. Imagine 2 investors starting with 10 lakh rupees in 2006. Investor A spreads it across 50 balanced portfolio picks. Investor B concentrates capital in a handful of high-conviction ideas, one of which happens to be Bajaj Finance. 20 years later, Investor B's single Bajaj Finance position is worth 32,310 INR alone. Investor A's balanced portfolio returns are nowhere close. You will not find the next Bajaj Finance on a trading app. You will find it by reading annual reports, tracking promoter actions, understanding business models in plain language. That is exactly what we teach at Multibagger Shares. Our full value investing course is linked in the description. Read the complete blog post on multibaggershares.com. Join our Telegram channel at Long Term Equity with Y for daily insights. Thank you for watching. This is Manish Goel signing off from Multibagger Shares.